Hello guys, I welcome you guys once again to my technical analysis video. My name is Henry the Great. You all are highly welcome to watch this analysis on NZDJPY using the concept of technical analysis, harmonic patterns, and then we'll look at smart money concepts and reversal candlestick formations. Okay, so we're going to analyze the this particular pair right now. So we can see I'm on the weekly time frame. Everything is looking clean. Everything is looking sharp. So let's assume that you are asked to analyze this pair. Okay, you are asked to analyze this pair from the just do a top analysis on this pair using your strategy. So on this analysis right now, I'm going to apply the concept of key levels. We'll look for patterns, and then we'll look for first of all we'll look for key levels, then we'll look for structure, and then we'll look for patterns, and we'll look for entry. Okay, so we're going to go from the weekly down to the entry. So the chart is super clean, nothing is here. But then let's start from analysis. What do we do on the weekly time frame? On the weekly time frame, we mark out the weekly key levels. Okay, the current weekly key levels. That's what we do on the weekly time frame. Okay, so this is a key level. Okay, so we'll mark them out. Okay, just extend it to the right, expecting price to react from there. Okay, this is another key level as well, key level of order block and the rejection wick around that level as well. So you extend it to the right, you can also extend it this way. So price is also reacting from this key level of rejection block as well. You can see multiple reaction at that level also. That's another key level there, right? Then we'll have this key level as well. This beautiful wick here that might be calling price as well. So, and then we also had these ones in the past. Can see this was a key level that price reacted from in the past. And then, we are retail traders. What do? We forecast. All we do is forecasting, and then we make money off of it if our forecast is right, and then we lose a little money if it is wrong. That's all we do. And how do you forecast? You use past history, past record of price action to forecast future price what actions. That's all we do. That is all. Applying your strategy and your concept. That is all. If you understand it in this way, it will help you. You've seen this kind of thing happen in the past. Then, if that thing begins to happen again, you ask yourself, you've already seen this happen in the past. It might happen again. Then you look out for entry. That is all we do. Focus. That's everything we do here is all about focus. All right. So, if since price have reacted from these key levels before in the past, there is high chance that it will react from this type of key levels whenever price create this type of thing on the higher time frame. So that is all we do. All right, good. So these are key levels in the past that we don't even need to mark them out because we don't need to do anything there. So these are what we're looking at for right now on the weekly time frame. So on the daily time frame, we begin to look at for the current trend of the market. Are we bullish or are we bearish? Overall direction of the market. So what is going on here right now? So you can see that we've been very, very bullish on NZDJPY for a very long time, but then we'll start to make this correction. First of all, we've had a shift in market order flow. So price action is now bearish. You can see we are massively bearish on this leg. You can see even this trend line also. You can see how we've been very much bearish on this line, but we'll have a lot of imbalance to the upside. So price might push up, but then probably as we're seeing this trend line right now, you can see price has been very much bearish for a very long time. And then, so you can see what is going on here on uh, NZDJPY. Okay, so this is all we're looking at for. So we've been bearish on this leg, then we'll have this shift again now in market structure. Okay, price have taken out this high, and then we're looking at to the upside. Okay, so we are now looking out to the upside, but then price can just start buying from here to the upside. So we have a lot of things to the downside as well. Price have also reacted from this other block as well. You can see that was what happened there. If we zoom in on that, you can see our price reacted from that other block, and then it's pushing all the way up, and then it's meeting this key level also. This is another other block that price have actually reacted from right there, and it's reacting from that daily order block. Of course, we have to look out for this type of things on the higher time frame. Okay, so then what is the direction of the market? Look at what is going on here right now. Now, there has to be a correction in this market. First of all, there has to be a correction because price just broke out of this high and then closed below, and then going back there to mitigate whatever that is left there. All right. Now, institutions, as you're entering the market, whenever institutions are entering the market, they don't just enter market because they have a large pile of orders. They take, because of slippage, right? So they push the market, right? They don't want to cause any kind of panic in the market because of their large pile of orders. So they push the market a little bit. You're going to see the reaction, that is the displacement, and then gradually market correct back into that level which they bought or sold from. Then they will be able to execute their final order without causing any change, without causing any panic in the market. That is all you have. But some of those panics are the imbalances that we see, the other blocks that we see. Okay, now price have pushed all the way up. Okay, breaking this structure, we're expecting a correction at least to this discount area before continue to the what, to the upside. So there's possibility that we're going to have a temporal sell before we continue doing what, going up. So on the 4 hour time frame, we begin to look at for entry and strategy and all of that. So we start to look at for patterns. Okay, so we start to look at for what, for patterns. Do we have any kind of patterns we recognize? Because I trade harmonics, so we have the cipher, the shark, the butterfly, the deep crab, the bat, the alternate bat, and the ABCD pattern. So these are the patterns that we trade in the harmonic family. So harmonic is a mathematically grounded, the precision based approach. It's a measured approach. We apply the concept of Fibonacci levels, and then we combine it with smart money concept for precise entry and for better understanding of the financial market. So that's all we do. So we tend to buy low and then sell high. So at this point in time, we wouldn't be looking out for buy. All right. So we expect price to at least correct back into this imbalance or even within this discount area for a continuous buy to the upside. So at this point in time, we'll start to look out for sell bearish harmonic setups. Okay. Then I'm seeing this kind of pattern right here. And I'm seeing this pattern. I don't really know if this is valid, but I'm looking at this pattern here and to the upside. I'm just seeing this type of pattern. So I'm going to use my Fibonacci to measure the pattern to know if it is valid. We don't just trade pattern, we trade measured move. That is the difference. So with Fibonacci level from here to this point and 1.0, 0.886, no, that is not a shark pattern. So let's see if we can adjust this to get that shark pattern there. Okay. Perfect. This is now shark of 1.13 and it's very, very much valid. Shark of 1.13. So that is excellent and that is valid. So we look at that very well. And then before we can actually verify if that is a shark, what about this retracement below? This retracement below, is it a minimum of 1.13? So we look at that as well. You can see the difference between a harmonic trader and just a random retail trader. You are using a precise mathematically proven strategy. Okay, so you can see that it met the minimum requirement for a sharp pattern of X to A extension or projection of the this XABC whatever. But then this leg has to be minimum of 1.13. That is it. So it met the minimum requirement. So that is valid. All right. So since that is valid, all we have to now do is to use the SABCD tool to enclose that area. All right. So this is the SABCD tool right here. Let me just extend that a little bit so I can be able to see what we are doing very well. Good. So this is the SABCD tool. We do something like this. Okay. And then we do something like this, and then we extend it towards to this point. All right. So once you are done with all of this information, you can as well mark out to label the setup so that you know that this is a particular setup you're looking at. And this is all called shark what pattern. So what we do now is very simple. We just have to select everything on our the panel through TradingView have made it possible for us to group our chart so that our chart will be looking super clean. All right, so we just have to now group everything, put them in a group, and then lock it up, and then we can see how our chart is now looking sharp. And then this is all we do. Now, entry. How do we catch our entry? Now we have another setup here, which is on the lower time frame, which is on the 30 minutes time frame as well. and this setup did not actually complete on the 30 minutes time frame. We're expecting to see even on the 2 hour time frame as well. The setup didn't actually complete at 0.786. But is this a valid cipher? Let's look at the measurement as well. You don't just trade randomly, you have to look at the measurement also. It didn't meet the minimum requirement of a cipher of 1.272, so it's not valid. Then it should be valid for Shark. So yes, it's valid for Shark. Minimum requirement of 1.13, that is valid. So but then do we have the retracement of 0.886? I doubt we don't have that retracement of 0.88. So this scaling trade is not valid because we're supposed to have a scaling trade of this type of pattern, and then we'll have something like this 886 for us to have this, but it's not actually valid. Now, what is going on here on, let me just hide this particular one right on in a different group. So what is going on here on for entry? Let's look at what is happening on the 4 hour time frame. Now you can see that from the 4 hour time frame, let me just uh, remove this for clarity's sake. Now, on the 4 hour time frame, you can see what is going on here. Now, this is what we call breaker block. This was an order block that price was supposed to respect as it was coming down, but then price traded below it and is coming there to react from that level. So it is valid, and that is the smart money. You can see smart money is coming in, and then we'll have inducement as well. And we have already had a shift in market order flow. So you can see that we'll have this shock, and then price came back, took out the last swing low at this point, showing we have temporary bearish momentum to the downside. Then how do we now look at for our entry? Candlestick patterns, okay? We look out for exhaustion in the bias. If we see bias exhaustion, then we look out for entry. So that is what we look out for entry. We look out for bias exhaustion, and then when we see that bias exhaustion on the 4 hour time frame, and then we pick our entry. And then for our target, of course, for our target, everything in harmonic is precised. Everything is precise. Everything is super precise. So for the target, we look at zero point 0.5 and 0.8 aces measure from C to D. Measure from C to D. That is a take profit level of a shark pattern. Okay, so zero point 0.5 and then 0.886. So these are the take profit levels of a shark what pattern. So this is what we'll be looking at for. This is what we'll be looking at for on NZDJPY. As at the time of making this video, today being the 21st, 20, I beg your pardon. Today is 28th of May 2025 as at the time of recording this analysis. So this is all we're looking at for. We're looking at to sell probably to this point, sell to this point, and then continue push to the upside. Then there's another type of harmonic pattern which is called the 5-0 pattern. Of course, the 5-0 pattern is a precursor of the shark pattern. So for the 5-0 pattern, if we have a respect of, if price was able to respect 0.5, 0.618, then we can look out for a buy to the upside, which is still valid. All right. So that is that for now on NZDJPY. Thank you guys for joining me on this section. If you like the video, follow, subscribe, and then if you're interested, of course, you can reach out to me. My DMs are open every time. You can see how we started from this chart on the weekly time frame, how smooth our chart was, and then you can see how it is looking right now because we've been able to you know make informed decision based on the available data we have, and that is all about trading, making decisions based on available data you have, of which is readily available to you. So thank you guys for joining me on this section. I love you guys and wish you guys all the best and more profitable opportunity out there. And then bye for now, guys, and have a wonderful day.